Everybody, and welcome to week number 5. We're moving right along, and in this week you've got two chapters to cover, chapters 6 and 7. They're kind of related, so what you read in one will apply to the other. So let's talk about that. I'm going to go into the textbook here. So we're starting off the next unit, which is talking about working capital management. When we talk about working capital, we're talking about current assets. We're talking about how we utilize those. So in chapter 6, we're going to be talking about working capital and financing decision. So what you have basically in terms of working capital goes a long way to determine what you can do in the short term to grow your business. So we're going to explain how working capital management involves financing and controlling the current assets of the firm. And they're pretty considerable. The issues that come about as a result of that are really important. If you're a small growing business, they're hugely important. And if you're a large business, they're important when you're trying to attract investors. We're going to talk about that management must distinguish between current assets that are easily converted to cash and those that are more permanent. So there's a little bit of split there, and you'll see how that works. You're going to recognize that the financing of an asset should be tied to how long the asset is likely to be on the balance sheet. It's a very important decision to make. We're going to explain why long-term financing is usually more expensive than short-term financing based on the theory of the term of structure of interest rates. And take a good look at that. There's some problems that will be asked about in that area. You're going to talk about risk. We've talked about risk many times already in class. We're going to continue to talk about risk as well as profitability, and that they determine the financial planning for current assets. Those things matter. Illustrate why expected value analysis is sometimes employed in working capital management. Expected value analysis is very commonly used, so pay close attention to that, and I think you'll get a lot out of it. If you look at, we're going to move on to chapter 7, where we talk, I'm moving along here. We're going to talk about current asset management in and of itself. So we're going to talk about current asset management involves the management of cash, marketable securities, accounts receivable, and inventory. For some firms, that's a huge amount. So when we talk about inventory, for example, Walmart's inventory, I believe, runs around $65 billion with a B. It's a lot of money tied up in inventory. It's not surprising with the number of stores that they have and the number of products that they have in those stores. It's not surprising that they own that much inventory. So that's where the money's tied up, which is fairly typical of a retailer. And but how they manage that is extraordinarily important to their profitability. We're going to explain what's involved in cash management because cash management is an important thing. This is sort of an interesting side note. Cash as an asset is, if you're a small growing company, is just extraordinarily important, because sometimes the number 2 reason why small companies, startup companies, fail is that they don't have enough cash to manage their business. Now that sounds kind of unfortunate, but it's also very challenging when you think about when you start up a company. You have very uneven demand. You grow by leaps and bounds, but you need cash to cover all your expenses of operating your business all throughout that. So it's a really challenging time in the growth of a small company when they first start. So cash management is a really important part of that. If you're a large corporation, say like Apple, you don't want too much cash. Why? Because I'm an investor in Apple, and I say to myself, wait a minute, you got an awful lot of money in cash. I want you to invest that in the next iPhone or whatever product that's coming along that's going to make me a whole lot more money, because frankly, you're only going to do marginally better than I can investing in cash. Putting them in a money market or some type of security like that. And so guess what? I don't want to give you money for you to invest at a bank. It doesn't do me any good. I'm not going to get a return from that. I want you to employ that cash. So you can have too much cash. So it's sort of a double-edged sword depending on where you are in the evolution of your business. We're going to talk about what are marketable securities and how you manage them. We're going to talk about the requirements of accounts receivable management. A lot of companies, as part of their ongoing business, sell to their customers on terms. In other words, they ship to customers without actually taking cash in or some type of a payment in. They ship things out and then send an invoice or send a statement at the end of a month, and the customer is on the hook to pay for that. So accounts receivable management is an important part of lots of businesses. We're going to determine the level of inventory necessary to enhance sales and profitability. It's one of the biggest challenges that retailers, e-commerce or physical retailers have, is to have the appropriate inventory in stock when you need it. Having a lot of inventory doesn't do you much good if it's not the stuff you sell. So there's a lot that goes into that, and it's a very, as forecasting goes, it's a very intricate kind of calculation, and something that is not easy to do, but the best companies succeed at doing it well. So, and then we're going to understand that the less liquid an asset, the higher the required return is. And that goes right back to when we were talking about some of the risk return things we were talking about before. So current asset management is a really important, working capital management is a really important part of operating a business. And what management finance is really lots of time concentrated on. Okay, so good luck with the homework. If you have any questions as you go along, don't hesitate to reach out. And good luck. Just sort of a heads up. Start preparing. Our first test is coming up in the next week or two, and I'll get some information out on that next week and help you prepare for it. Okay? So keep going along. You guys seem to be doing really well, but if you have any questions, don't hesitate to reach out and ask. Take care. Best of luck.